Hello everyone, this is Beyond Dale here again with another edition of the Forex Observer. Today is Monday, July 29th, and we have a number of currency pairs we're going to take a look at today. Okay, we're going to start with the US dollar index. It's a weekly chart of the US dollar index. Market has been in a slight uptrend here, but I interpret this uptrend to be a retracement of this larger downtrend. So the main move in the dollar index is down, and this is interpreted as a retracement. So, and on the weekly chart we got a sell signal for the US dollar index. So long term we're bullish, or we're bearish on the US dollar, bullish on the euro and the other European currencies. So that's what happened. That's what's happening long term in the US dollar index. Let's take a look at the euro. And as we can see, we're still watching this head and shoulders pattern play out. Where this is the left shoulder, this is the head, and this is the right shoulder. So the market bottomed, put in a double bottom here. This is a weekly chart of the euro. This is actually a triple bottom. The market found solid support here at 128 and gave us a buy signal on the daily chart. So let's just take a look at the daily chart. So this is the triple bottom. And this was the buy signal at about 130. So we're still in this position trade to the upside on the euro. Now what I expect on the euro, it was critical for the market to clear resistance, this resistance level. So the market has cleared this first resistance level, and the next area of resistance we need to clear for the bulls to have some greater confidence is 134. The actual high is 134.16. So the bulls need to clear 134.16 to just be more confident. And we could see this week, this area, this former resistance area, act as support. Now, if this support is broken, we could see the market pull down or pull back even further. But we'll just have to see if this support level holds at 132.50. So, in summary, euro in an uptrend, and we're looking for the market to clear 134. Taking a look at that the Swiss franc is in a downtrend. We got our sell signal here, and the market is moving downwards. So a prudent approach is to sell all rallies for the Swiss franc. Now the British pound, as you may recall, the market broke out of a triangle. So let me draw the larger triangle here. Broke out of this triangle, and the follow through has been fairly muted so far, but the market found support in the 132, the 148 region here, and put in a double bottom. Now the chart on the British pound does not look as bullish as the euro. So in taking longer term long positions, I would prefer to trade the euro rather than the British pound. And because of this chart on the British pound is bearish, we can take advantage of selling opportunities in the pound by the trade that we are in, the British pound Swiss franc. We can see that this is in a downtrend. We enter the market somewhere in the 146 region, and the market is continuing down. I expect the market eventually to take out this low here at 140 and possibly head down further to maybe 138 or so. Another market that's short the British pound is Euro pound. We can see that the market is in an uptrend, and a prudent strategy would be to buy dips in this rally. Okay, our next market is the Canadian dollar, and someone pointed this out to me. Actually, a student pointed it out to me of the reverse head and shoulders pattern that could be forming in the Canadian dollar, where this could be the left shoulder, right shoulder, and the head. So the market could be in a rounding type bottom for a break above this 105 level. So the market is positioning itself in a bullish tone, and this pullback here, we'll have to see if the supports hold, but I'm looking for a buy signal in this 102 region. As you can see, we have this is our pivot point chart. We have monthly pivot point support at 102, and 102 is also a Fibonacci retracement point. 0.786 retracement is at 102.39. So we'll be taking a close look at this 102 region for a buy signal in the Canadian dollar. So you can keep that on your radar for this week. And I will send a buy alert if it occurs out. Another market to keep in mind is the Japanese yen. Now, the Japanese yen has had US dollar has had a huge move up on the Japanese yen. And what is happening now is that we could be at the beginning of a head and shoulders reversal. So this will be the shoulder here, and the head. So we have to keep that in mind, and we will see if the market eventually takes out this 94 region for a move down. So we'll be keeping an eye on that. There is no real signal yet in the yen on a long-term basis, so we'll just have to keep that in mind. And just taking a look at the weekly chart in the yen, we could see that this could be this move up here from the 75 region up to 105, well, just shy of 105, could be a retracement of this larger downtrend. So this could be just a retracement upward of this larger downtrend. So when we're looking at currencies, it's always good to look at the big picture, what's happening in the big picture. And for you position traders out there, this could shape up to a pretty good position trade. So we'll keep our eye out on that. Another market of interest is gold, and we see that gold has moved down roughly from 1800 down to 1200, a pretty significant move down, but it could be a retracement of this larger move up. So keep in mind that the markets don't normally just move up and up forever. They move up, retrace down, and our job is to buy the retracements down and sell the rallies. So a good trade in gold is for position traders again. If you trade the weekly time frame, we're along this market on the weekly time frame. So we can keep that in mind. So that's a look at the currencies this week. So in summary, I will publish the trade sheet of our open trades. But in summary, we're looking to enter the Canadian dollar. We'll continue to hold our euro position, our pound franc position, and euro pound is also a good position that you could be in, and the gold position. And I will be sending out alerts as they come throughout the week. So keep an eye on your inbox or check the members area for those alerts. And just an announcement, if you use Gmail, well, if you use any mail provider, it's a good idea to put info@acestrading.com in your address book, because sometimes the trade alerts don't hit your email inbox. So it's a good idea to add our addresses to your contact list to ensure that the trades enter your email inbox. And you can also check the members area, because the trades are published in the members area. Happy trading, and have a good week. This is Beyond signing off.